Okay, let's dive into this investor presentation for Indigo Paints. Oh, it seems like they're covering their Q4 financial year 2025 and full year financial year 2025.
Yeah, sounds good. I see a disclaimer right at the start about forward looking statements and potential risks, the usual stuff. They're covering financials, growth drivers, sustainability, and outlook.
Right. On the next slide, they're presenting the standalone financials for Q4 financial year 2025. Revenue from operations is 367.2 crore rupees.
Okay, 367.2 crore rupees in revenue from operations. And what about the growth? It says revenue grew just 0.3% year over year, huh, which isn't exactly stellar.
Yeah, no, it's pretty tepid growth. The gross margin is 47.4% and the EBITDA margin is 23.4%. They're highlighting that they're maintaining pole position, which I guess means they're still leading in some areas.
Yeah, but that 0.3% growth in revenue is a bit concerning. What about PAT?
PAT, or profit after tax, is 56.9 crore rupees with a 6.3% year-over-year increase, and A&P, advertising and promotion, as a percentage of revenue is 5%.
So they're spending less on advertising as a percentage of revenue. Interesting. Maybe they're becoming more efficient with their marketing spend, or maybe they're cutting back.
Could be either. Moving to the next slide, let's look at the full year financial year 2025 standalone numbers. Revenue from operations is 1,277.2 crore rupees.
That's for the full year. And the growth there?
Just 1.8% year over year. Very sluggish. Gross margin is 46.5%, which they're touting as industry leading. EBITDA margin is 18.1% and PAT margin is 11.1%.
So margins are down a bit for the full year and the growth is anemic. PAT is 143.9 crore rupees, a decrease of 3.2% year over year. That's not what you want to see.
Definitely not. They mention industry-leading gross margin, but that's only one piece of the puzzle. A&P as a percentage of revenue is 6.4%, down from the previous year.
Okay, so both the quarterly and full year numbers show a slowdown in growth and some margin pressure. Let's see if the next few slides provide more context.
Agreed. The next slide seems to be a summary of the standalone financials. It shows sales, PAT, EBITDA, and ROCE, return on capital employed, for Q4 financial year 2024, Q4 financial year 2025, financial year 2025, and financial year 2025.
Okay, I see it. Sales are up slightly in Q4 and there's a modest increase for the full year too, though growth is sluggish. PAT is up in Q4 but down for the full year. EBITDA is up in Q4 but actually a bit lower for the full year. And ROCE has dropped compared to last year.
Right. The commentary on the side highlights a 0.3% increase in revenue for Q4, calling it a reflection of sustained sluggishness in the industry.
So, they're blaming the broader market. They also mention maintaining industry-leading gross margin due to differentiated products. Is that sustainable though?
That's the question. They note a decrease in A&P expense as a percentage of revenue, which we already discussed, and the EBITDA margin was a record high for the quarter, but adversely affected for the full year due to slower top-line growth and higher employee costs.
Higher employee costs could be a concern. Are they investing in talent or are costs simply ballooning?
It's hard to say without more detail. They also point out that the PAT percentage improved for the quarter but was down for the full year, and the PAT was lower due to the slowdown in growth and higher depreciation.
Depreciation is a non-cash expense, but it still impacts the bottom line. Overall, these standalone numbers paint a mixed picture. Resilient margins, but weak growth and declining profitability.
Exactly. Let's move on to the next slide, which presents the consolidated financials.
All right, let's see if the consolidated numbers tell a different story. It looks like we have sales, EBITDA, PAT, and ROC for Q4 and the full year.
The sales figures are 387.6 crore rupees for Q4, financial year 2025,
and 1,340.7 crore rupees for the full year. How do those compare to the previous periods?
Looking at the slide, sales increased from 384.9 crore rupees in Q4 financial year 2024 to 387.6 crore rupees in Q4 financial year 2025. For the full year, sales increased from 1,306.1 crore rupees to 1,340.7 crore rupees. So, some growth, but not much.
What about EBITDA?
EBITDA is 87.4 crore rupees for Q4 financial year 2025 and 233.5 crore rupees for the full year. Those are up from 84.6 crore rupees and 238.1 crore rupees respectively. So, EBITDA is showing a bit more resilience than sales.
And PAT?
PAT is 57.4 crore rupees for Q4 financial year 2025 and 142.2 crore rupees for the full year. The full year is down from 148.8 crore rupees. So, PAT is still struggling to grow.
Finally, what about ROCE?
ROCE is 19.0% for financial year 2025, down from 22.8% in financial year 2024. So, overall, the consolidated financials are showing slightly better growth than the standalone numbers, but PAT and ROCE are still under pressure.
Okay, so a similar story, just slightly less negative. The next slide is titled Consistently Outpacing Industry Growth. Let's see what they're claiming here.
It's a chart comparing Indigo Paints' growth to the industry's growth from Q1 financial year 2024 to Q4 financial year 2025. It seems to suggest that Indigo has consistently grown faster than the industry.
They are showing Indigo's growth significantly higher than the industry average, with figures like 28.8% versus 0.7% in Q1 financial year 2024. But the last point on the chart, Q4 financial year 2025, shows them much closer, with Indigo at 0.7% and the industry at negative 0.7%.
Exactly. It looks like the gap is closing and industry growth is now negative. I'd be interested to see if this trend continues.
Agreed. Cherry picking the data a bit, perhaps. Moving on to the next slide, they're highlighting that they're maintaining pole position in terms of gross margin percent.
This is another chart comparing Indigo's gross margin to the average of other paint companies. And again, they're showing themselves consistently higher.
Yes, but the trend is concerning. Indigo's gross margin has declined from 48.9% in Q4 financial year 2024 to 46.8% in Q4 financial year 2025. The industry average has also declined, but Indigo is declining faster.
Right. So while they're still leading, their lead is shrinking and their profitability is being squeezed. What's next?
The next slide provides a financial snapshot for the last 5 years. It shows sales, EBITDA and PAT from financial year 21 to financial year 25.
Okay, this gives us a longer-term perspective. Sales have grown steadily over the past 5 years, but the growth seems to be slowing down in the last couple of years. EBITDA and PAT have also grown, but again, the growth has been less impressive recently.
Exactly. It's a good visual representation of the slowdown we've been discussing. The next point is product category snapshot for Q4 financial year 2025.
All right, let's see what's driving the revenue. The chart shows year-on-year growth for different product categories.
Looking at the value growth, putty and cement paints are down by negative 8.4% and emulsions grew by 1.3%. On the other hand, enamels and wood coatings grew strongly by 11.4% and primers, distempers and others grew by 6.3%.
So it's a mixed bag for the quarter, with some categories growing and others declining. What about the full year numbers?
The next slide covers the product category snapshot for financial year 2025. Looking at value growth, emulsions are up 1.9%. Enamels and wood coatings are up a mere 0.5%. Putty and cement paints are down by 1.3%. And primers, distempers and others are up by 11.1%.
Okay, so the full year picture is also mixed. And for some key categories like enamels, the growth is significantly weaker than in the last quarter. They also mention that the revenue share of differentiated products is largely flat.
Yes, at 28.2% in financial year 2025 versus 28.4% in financial year 2024. Huh. I wonder if they had expected that to grow more significantly.
It would seem so, especially given their emphasis on innovation. Continuing, the next slide talks about network expansion.
It seems they are tracking active dealers and depots. The chart shows a steady increase in the number of active dealers from Q1 financial year 2024 to Q4 financial year 2025.
Yes, the active dealer count has increased from 16,693 in Q1 financial year 2024 to 18,371 in Q4 2025. That's good to see. It shows they're expanding their reach.
They also mention having tinting machines deployed at over 11,000 outlets. That's a significant investment in infrastructure.
It is. It suggests they're committed to providing a wide range of colors and customization options to their customers.
Next up, we have future growth drivers Indigo Paints 2.0 strategy.
Okay, it looks like they're outlining their strategic priorities for the future. It's broken down into 5 key areas: product innovation, geographic expansion, capacity augmentation, brand and marketing focus, and expansion into adjacencies.
Starting with product innovation, they're focusing on developing differentiated products to grow market share and expanding their product portfolio on the back of inorganic growth initiatives.
Okay, so they're looking at both internal development and potentially acquisitions for product growth. What about geographic expansion?
They're planning to grow in Tier 1 and Tier 2 cities and augment engagement with painters and contractors.
Interesting, including the painters under geographic expansion. What's the plan for capacity augmentation?
For capacity, they're aiming to be future-ready by expanding in existing strategic locations and setting up a state-of-the-art plant with automated material handling.
So, investing in modernizing and increasing their production facilities. And next, brand and marketing focus?
They plan to ramp up sales force, step up brand promotion, and engage with the influencer community, and increase customer engagement through digital channels.
All right, that covers their marketing efforts. What about that fifth point, expansion into adjacencies?
That involves expanding into the non-decorative segment, specifically foraging into adjacencies like construction chemicals and waterproofing. They are tapping into the high-growth India infrastructure segment through Apple Chemi India Limited.
Ah, that links back to the Apple Chemi discussion we had earlier. So, a comprehensive approach covering products, reach, capacity, marketing, and new segments. This Indigo Paints 2.0 strategy seems well-rounded and addresses key areas for future growth.
Indeed, the next slide is a brief recap of the infrastructure.
Ah, yes, by the numbers. 5 manufacturing plants, presence in 28 states, 54 depots, 18,371 active dealers, and 11,000 tinting machines. A good overview.
Now they're diving into the capacity augmentation and expansion progress. This seems important given their growth strategy.
Yes, it appears they have an upcoming plant at Jodhpur and expansions planned for existing plants in Pudukkottai.
The Jodhpur plant is a water-based plant with a capacity of 90,000 KLPA, and they expect commissioning by Q3 financial year 2026.
That's a significant increase in capacity. And the Pudukkottai plant?
They're installing a solvent-based plant with a capacity of 12,000 KLPA, expected to be commissioned by Q1-Q2 financial year 2026.
Okay, good to see they're expanding both their water-based and solvent-based production capabilities.
They are also commissioning a brownfield expansion of the putty plant by Q1-Q2 financial year 2026.
All these expansions should help them meet future demand and support their growth plans. The next slide looks at brand focus with advertising and promotional spends.
Yes, it's a chart showing advertising and promotional spends in INR crore and as a percentage of revenue from financial year 19 to financial year 25.
It looks like the spending has generally increased over time, but the percentage of revenue has fluctuated.
The commentary mentions a focus on both ATL, above the line, or BTL, below the line, marketing activities, and intensifying engagement through digital channels.
That makes sense, given the increasing importance of digital marketing.
On the next slide, Marketing Focus, they are highlighting enhancing digital outreach and new advertisements.
It shows some examples of their recent ad campaigns, including waterproofing for exterior walls and a new XT emulsion.
Moving on, they're discussing Apple Chemie.
Right. Indigo Paints acquired 51% of Apple Chemie to enter the construction chemicals and waterproofing segment.
They highlight a rapid growth, but adverse sales mix impacted profitability. Revenue is up from 18.8 crore rupees to 20.4 crore rupees, but margins took a hit.
An adverse product mix can definitely squeeze margins. What's the outlook for Apple Chemie?
The presentation mentions they expect margin improvement in Apple Chemie with improving product mix and focus on select geographies.
That's good to hear. It seems like they have a plan to address the profitability issues. Let's move on to the ESG updates.
Okay, they're highlighting a few initiatives. They're awaiting regulatory approvals for 330 kilowatts of solar panels at the Kochi factory.
Good to see them investing in renewable energy. They are also doing community service to undertake painting of government schools in Tier 2-3 towns.
Yes, that's a unique initiative involving painters.
Next up, on the next slide, more on the Community Development Initiative.
This slide details their initiatives around education of underprivileged girls and healthcare for the underprivileged.
It's good to see them giving back to the community. They're providing education assistance through the Payal Jalan Trust and healthcare through the CanQ Foundation.
They also have a health benefit program for the painter community, extending it across the country.
That's a great initiative, supporting the painters who use their products.
They are also launching a Skill Up program to empower painting professionals with soft skills.
Okay, that covers the ESG initiatives. Finally, let's look at the outlook.
The outlook section is key. They expect a gradual improvement in demand sentiment, which was visible in Q4 financial year 2025 to continue into Q1 financial year 2026.
And they anticipate demand to return to original growth levels by Q2 financial year 2026. That seems optimistic given the current economic climate.
They also mention that raw material prices continue to soften, which should improve margins.
That's definitely a positive. Lower input costs will help boost profitability.
They expect higher growth in premium emulsions and the waterproofing sector to aid profitability.
Waterproofing seems to be a key growth area for them, especially with the Apple Chemie acquisition.
Finally, they anticipate that EBITDA margins for financial year 2026 will improve with better demand, lower raw material prices, and an improved product mix.
And they expect margin improvement in Apple Chemie as well. Overall, the outlook seems cautiously optimistic, assuming demand recovers and they can manage their product mix effectively.
Yes, a lot hinges on that demand recovery. Well, that covers the entire presentation. It seems like Indigo Paints is facing some challenges in terms of growth, but they have a clear strategy in place to address those challenges and capitalize on future opportunities.
Agreed. It'll be interesting to see how they execute their Indigo Paints 2.0 strategy and whether they can achieve their growth targets.